Everyone wants to build wealth through real estate, but the truth is that most people start at the wrong level. There are 7 major levels of real estate investing that I want you to be aware of because each one requires completely different strategy. And if you start too high, you will lose money and lose momentum to build the real wealth you're looking for. But if you master them in the right order, you can go from your first property to full financial freedom, one level at a time. So let's find out, what level are you right now? And by the end of this video, you will know exactly what your next move should be. If you're meeting me for the first time, I am Wale Lawal. I'm a Texas-based investor agent. I currently have a 7-figure rental portfolio comprised of 30 rental units, and I've helped over 400 new and experienced investors and home buyers to make smart decisions when it comes to real estate. So the level 1 is the house hackers or house hacking strategy. This is where almost every smart investors I know of typically start, and I've personally helped about 58 people to implement this strategy. Majority of them are new investors, just want to get their feet wet in real estate. This strategy is very simple. You simply buy a duplex or a triplex or a single family home that have extra room. You live in one unit, you rent out the other unit or other rooms as the case may be for you, and let the tenant cover your mortgage for you. If this is done right, it should cover about 90% of your monthly mortgage payment. So this strategy is for first-time home buyer who want to live for free or reduce their mortgage payment by 90%. And the goal for house hacking is to cut down your biggest expense, which is your mortgage, is to also start real estate investing with little to no money out of your pocket. It also help you learn about real estate investing, property management, and landlording with little to no risk. And above all, house hacking allow you to even decide if real estate investing is for you or not. So here's the pro tips. You want to run your number as if you are moving out from that house tomorrow. That is, you should be analyzing it as a conventional investment property and know exactly what each unit will rent for. I use that in your analysis before you even sign the purchase contract. So the level 2 investment strategy is your traditional landlording. This is your buy and hold, right? So once you build some confidence with maybe you own your primary residence, you can now move up from there to buy an investment property. Again, I've helped a lot of people to do this. Talk about your professionals like your doctor, CPA, lawyers, successful business people, successful entrepreneurs, and you typically buy a property just for you to rent it out to tenants. You can do this by buying a single family home, or you can buy a small multi-family like your 2-unit, 3-unit, 4-unit, like your duplex, triplex, or fourplexes. And you can do this in a stable neighborhood with strong rental demand and appreciation. And again, this is for busy professionals like your doctors, C-level corporate people that want steady income and appreciation without all the headaches. The goal here is to build a predictable cash flow and equity for a few years to come. Now, I must warn you here, don't chase the cheap rental area. Chase the stability and massive tenant demand. That will help you win on the long term. You also want to avoid the high turnover and low quality tenant area because this will destroy your return faster than you can imagine. And that takes me to the level 3, which is your short-term rental operator or investor. This is another real estate investing strategy and for different kind of people. In this strategy, you will see investors that are chasing higher monthly cash flow and higher return on their investment. They will typically furnish the home because it's a short-term rental. It could be a single family home, it could be a duplex, it could be a condo, and it could even be a townhome. And they typically will rent out their property in the short-term rental website like your Airbnb and your BRRRR. Now, this is for investors that are looking to maximize their income faster and ready for hospitality business, because short-term rental, it's an hospitality business. It just have a component of real estate. So please get that right. So if you have zero passion to provide quality service to your guests, you probably will not succeed as a short-term rental operator. So the goal here for a lot of short-term rental operator is to triple their return, because in a traditional rental, let's say you're supposed to make $300 every month. With a short-term rental, you can easily make $900 net cash flow every single month if you do it right. Now, you want to learn the city's rules and regulation before you buy that property, because one zoning change or one city ordinance can wipe out your entire year revenue overnight. The level 4 is your value add investors, that is the BRRRR strategy. This is where you will learn how to force equity into a property. You will learn about renovation, you will learn about how to manage people. So the BRRRR strategy simply means you buy, you renovate, you you rent out the property, you refinance, and you repeat the process again. This is called the BRRRR strategy. Now, this strategy is for hands-on investors that are ready for renovation risk and managing construction workers. The goal for the BRRRR strategy, or the value add, is to build instant equity and reuse the same capital gain over and over again. Now, here's a quick backstory of myself. My first BRRRR deal was a small 3-bedroom, 2.5 bathroom in Houston, Texas. I converted it to a 4-bedroom, 2.5 bathroom by simply converting the garage to make it a 4th bedroom. Now, here's the surprise for me. I thought this renovation would cost around $18,000, but it ended up being around $26,500, which most of them went into plumbing and room addition. Now, I must say that I'm not happy with this, but this taught me a big lesson that I need to over budget for every project going forward. And now I have a rule that if the budget is $100,000, I will automatically be adding 15%, which is going to be $115,000 for the total project cost. And trust me, this one rule has saved me tens of thousands of dollars since then. Now, here's my pro tips for you. This strategy is not for beginner. You want to keep your renovation budget under 10% of your purchase price. So let's say you're buying a property, for the sake of simplicity, you're buying a $1 million property. Make sure the renovation cost is not going to be more than $100,000. If you're buying a $100,000 property, make sure the renovation cost will not be more than $10,000, because if it's more than that, the bigger your budget for renovation, the more likely something is going to go wrong. That is, there is more risk in the deal. Now, after you've done 3 deals successfully, of course, you can now start, taking more risk. But I do recommend keep the renovation budget really low. If the renovation budget is 50% of your purchase price, I probably will not buy that deal as a first-time investor, because there's going to be a lot of things that can go wrong. So I'm currently building a national community of investors that are helping each other to build wealth the right way through real estate, and I want you to be part of it. You will find the link to my community in the video description below. I do want you to join because I'm dropping a lot of free resources in the community and a lot of people are finding it helpful. I will see you there. The level 5 investment strategy is the small multi-family investor. This is where you start to scale your rental portfolio or your real estate portfolio in general. And I see investors buying 4 to 20 units under one roof because they like the multiple income stream, because multiple income means that multiple tenants under one property are paying their rent at the same time. Now, again, this is not for beginner. This is for investors that are looking to scale beyond the single family kind of play. And they are looking to scale their rental portfolio to apartments without all the syndication complexity. The goal for the investors at this level is to maximize efficiency, create consistent monthly cash flow, and have a predictable stream of income. So here is the pro tips here. You want to make sure you analyze this like a business, not a house. If the number doesn't make sense, I will walk away. You want to look at the cap rates, the vacancy, the maintenance, and also the management cost, not just the paint color. The number 6 kind of strategy is your commercial investors. Now at this level, I see investors that are now playing in the big league. At this level, we are talking about office space, retail space, warehouse, self-storage, mixed-use properties, among other strategies that fall into this level. This level brings in higher returns, longer lease term, and less drama. And this is for experienced investors, like I've said, that are looking to diversify beyond residential real estate. The goal at this level is stability, predictability, and long-term income preservation. Now, I must warn you here that commercial property don't care about emotion. It's all about the number. If the number doesn't work, please move on to the next one. My level 7 is your developers and syndicators. This is a top tier ladder when it comes to real estate investing and ownership of real estate. You are either raising capital to build or buy an apartment complex like your 100+ multi-family deal, or you are developing a new project from the ground up, like your build-to-rent subdivision. This is an advanced strategy for investors that has done a lot of deals. This is not for beginner. This is not even for intermediate level experience. The investors at this level are looking for high reward and high responsibility, and they have some financial backing to make this kind of deal happen. And the goals for these investors is to build a long-term wealth, legacy level equity, while helping their investors to also make money along the way. Now, I warn you that this is not a strategy you want to jump in as a solo person. investing, you want to partner with like-minded investors to build real estate wealth the smart way and help your limited partners to make money along the way. So here is the truth. Every investor fits somewhere on this ladder I just discussed. But the biggest mistake I see a lot of new investors make all the time is thinking they can skip the levels, because each stage gives you the skills and scars you will need for the next one. And if you are ready to climb from your current level to the next level, I want you to watch this next video right here, where I walk you through how to buy your first or your next rental property step by step. In this video, I show you the exact blueprint I've used for over 400 new and experienced investors, from 0 properties to now over 10 to 20 units in as little as 90 days. So trust me, you find a lot of value in the video. You can watch the video here. Thank you so much, and I will see you in the video. Peace.